Not a good sign. Annual job growth revised down by 911,000 jobs. Something slight, nothing too crazy, just 900,000. You know, nothing too bad because anything more, if it was a million, then we'd be in trouble. But this, something slight, man.
Called the biggest revision on record between April 2024 and March 2025. The U.S. labor market created 911,000 fewer jobs than previously reported. The change is the latest warning sign about a weakening economy, and we are still waiting for the expected impact of President Trump's policies on tariffs, immigration, and spending. So how much worse could it get? Joining us now, U.S. national editor for the Financial Times, Ed Luce, and Brendan Buck, who's still with us. Okay, so 911,000 fewer jobs, nearly a million. It is a big revision, but as was pointed out to me last hour by Justin Wolfers, percentage-wise, it is still not a giant number. Percentage-wise, the unemployment number really isn't changing.
Sure. Everything's okay. Everything's fine. Everything is under control. The economy's doing great. The jobs report was good. We have a strengthening of the labor market, and the current interest rates seem acceptable for the current climate that we're in for these type of scenarios. And I think with just a little bit more time, things will begin to balance out, and we'll start to see that reflected in the reports, and our position will seem more correct as time goes on. Did I even say anything? No, I didn't. That was stupid.
That being said, Ed Luce, is this portending a change in our economic status? Jamie Dimon today said this is just another indication that the economy is weakening.
Yes, I think it very clearly portends a growing sort of weakness in the U.S. economy, and the jobs market is a very important indicator of that. I mean, remember, we did also have downward revisions to jobs growth earlier this summer for the jobs numbers that have come since March. So although this trend dates right back into the last year of the Biden administration, and might well explain a bit more of the sort of voter dissatisfaction than some people anticipated in November, this is clearly a long-term sort of slowdown in the U.S. economy, which recent actions are only making worse. The last month of jobs growth was only 29,000. Downward revisions have been up to 100,000 a month. So, if we're going to see something along those lines down the line, then the economy could well actually be having net job losses as we speak. That's not a good sign.
If the Fed does cut rates by a quarter point, some are saying maybe even a half a percentage point might be more reasonable this time around.
I'm not going to lie. This is what I think. One, none of this matters. Nothing what that guy just said, none of that matters. What matters is, are the people who are in power, are they ready to start letting the market rise? The answer, I believe, is yes. The reason why is because it's been so long. I've been in the market the entire time, so I've really seen this whole thing play out. And at this point, I know because taxes, and they want to make more money, they're going to let the market pump. It's just going to be a lot quicker, I believe. It may damn near may be overnight, because they gotta pump some type of money, but it's still also got to be kind of inaccessible to the average person. I know people don't have money now, but apparently to these sick people, there are some people who do have money. And I agree, there are some people who have money, but very few. But I do believe they may even cut it by a full point. I don't know. I believe it's going to be a half a point to a point. Something big's got to happen, because if they're down this much, they got to do something big to really spark some stuff off. This is what I believe they're going to do. I also believe possibly a stimulus check at the end of the by the end of the year or something.
Is that going to help job creation? Could that sort of move turn this around, Ed?
For sure. I mean, the price of money, the higher the price of money, the sort of lower the investment rate. It's the cheaper you can borrow, the easier you can spend, and the easier you can invest. So that should help to some degree, particularly a 0.5 percentage point cut. If the Fed then really does quite a sharp turn and indicates that there will be more, I mean, I doubt they're going to get down to whatever it is Trump wants. He wants a 1% or 2% prime rate. They're not going to get close to that with these tariff wars on, because inflation is rising. And when you get rising inflation and rising unemployment, you do get something called stagflation. And so the Fed is going to be very, very wary of that. But for sure, interest rate cuts will help stimulate some activity.
All right, let me read a little bit from The Atlantic, and I'll bring in NBC News senior business correspondent Christine Romans for this about the job market. The title of it is "The Job Market is Hell" by Annie Lowrey. The process of getting a job has become a late capitalist nightmare. Online hiring platforms have made it easier to find an opening, but harder to secure one. Applicants send out thousands of AI-crafted...
This is why I think crypto is going to be so big in the future. And even right now, I believe there will be no jobs because of AI, because of just the fact that they just don't need them as many people because they're working people harder. They're going to find that these are going to be very prized assets. But like I said, I don't know how they're going to do it, but they're going to raise prices really fast, at least fast enough where a regular person can't get any amount. So should be interesting. I'm all for it. I just took a vacation, so I'm doing pretty good. I won't come back to work until after we hear about from the Fed meeting. So I'm all for it, man. I'm ready to see what happens, and I'm not excited because honestly, I'm extremely irritated. I thought the market, bro, would have turned back around at least a year ago, at least. And I'm still here. It feels like I'm just trapped in this weird purgatory because it's like I have so much assets, but like I'm waiting for them to rise and they just won't let it. It's just, it's good, but it also pisses me off. But this is America. Welcome back.
Resumes, and businesses use AI to sift through them. What Bumble and Hinge did to the dating market, contemporary human resources practices have done to the job market. People are swiping like crazy and getting nothing back. Wow, that does not sound fun, Christine.
No, it doesn't. I just got off the phone with a woman who's 31 years old, a marketing manager, and she's been looking for 6 months. She lost her job in March, kept hearing how great the job market has been and thought she'd find something and hasn't been able to. And she describes exactly that situation where a lot of interviews, 36 interviews, but she said she felt like companies were out there posting jobs, but not necessarily pulling the trigger on new hires. And I think we've seen that until now, Katie, when you look at the numbers, like a no hire, no fire kind of situation. Layoffs overall, if you believe the government data, have been pretty low. There haven't been a lot of layoffs, but the hiring has slowed. And these revisions that we've seen, while normal, revisions are always normal, these are much bigger than normal. They would suggest that what was a red hot job market wasn't quite so red hot and might be showing signs of turning now.
And also it might explain why people didn't feel so great about things.
I think you're right. You and I talked about the Vibe session for months, and I would look at these numbers that would suggest things were great.
Does anybody really believe that the economy is doing decent? Maybe these rich people that are so out of it. I mean, you'd have to be so loaded not to even realize that any of this is going on. It's like, oh, I didn't even know this, man. I guess there are people out there like that, but even me, man, I'm nowhere near that. And I feel like, dude, I notice everything. Maybe because I have a low-paying job, so even though I have assets to back me up, it's like I still notice prices a lot more. But that's only because I feel like overall for me, I do not want to be in the workforce of any sort. So I guess I'll use crypto to kind of not have to do that. But yeah, I just never was interested in climbing any type of a corporate ladder.
And people didn't feel it. We talked about, you know, bad messaging from the Biden administration and this and that, but maybe, just maybe, your engine of your own economy is your job. And if you feel comfortable or confident in your job, that can explain a lot.
It's also a lesson to politicians. Listen to what people are saying. Don't tell them what they should feel. All right, Brendan, I want to talk about your old boss, Paul Ryan. He is making some news on the debt. He's going on about the deficit again. He's worried about it. I'm going to read a couple of quotes from him as reported by Puck. I assume it's a bond market episode, an auction failure where basically the Treasury calls up the primary dealers and puts a gun to their head and says to Jamie Dimon, buy the rest of these bonds. The market will know it, yields will spike, and we have a crisis. First off, can you explain to me, Christine, what he's talking about so I know how to...
Well, if that happened, it'd be our worst day at work, frankly.
Well, what is he talking about?
Well, he's talking about if you had this issue where suddenly we are trying to sell our debt on the public market. You know, we borrow all this money and the world comes to us to buy our bonds. If suddenly there weren't buyers, you'd have a situation where you'd have the American banks would have to be in there on the hook for buying these bonds, or the whole thing falls apart. And then markets would know that the banks had come in to rescue the situation, and that would cause a crisis of confidence. It would be all very bad.
Thank you for giving me a basis and understanding that. I appreciate it, because here's what his solution is to it. Paul Ryan, again, as reported by Puck. Perhaps after the midterms in 2027, if the last person talking to Donald Trump in the room can convince him legacy defining, preserving the dollar, stopping a debt crisis, helping the world, maybe a commission could happen. There are Democrats and Republicans in the House and the Senate who are getting serious about this idea. Brendan.
Look, nobody's backing the dollar anymore. Let's just say it, man. It sucks. I mean, it sucks, but it could be worse. That's the scenario we're in. So, gold's going up, crypto's going up, stocks are going up. Anything but the dollar is going up. Because everybody's putting their dollar into stuff. I don't believe that we're going to see anything new. And the layoffs and stuff and all that stuff will probably stop at some point, but we're not going to see the jobs coming back. Who knows when they're going to start doing this universal income? Maybe that's what they're planning on. But they for sure stopped a lot of people's income, and it's not coming back. All these cushy jobs are not really there anymore. It's sad, because it's honestly, it doesn't really, I mean, it affects everybody, right? But it doesn't affect these older people that have money, and I mean, it does. But it really affects these younger people trying to get into the workforce that can't, you know? So it just makes everything like that much more difficult, which is unfortunate, you know? That's why you just gotta be careful, man. But yeah, I'll see you guys in the next video, man. Peace.